Hey everybody, Blake Eagle here, Financial Friday video tip of the week. Want to talk a little bit about tax savings, specifically how getting a mortgage may or may not help you save money on your taxes. So there's a lot of confusion about this, primarily because the rules changed in 2018 when the new tax law went into effect. So prior to 2018, pretty much every dime you spent on mortgage interest and property taxes became a tax deduction. So if your $2,000 a month went to mortgage interest and property taxes, that was $24,000 a year. If you were at a 30% tax bracket, it saved you about $8,000 a year. Pretty sweet, right? Okay, great. Well, let's look at that same scenario in 2023. If you're a married couple, after the new tax laws went into effect, your standard deduction went way up. In 2023, your standard deduction is $27,700. So that same scenario where you had $24,000 in write-offs from your mortgage, that has actually been eaten up by your standard deduction. So because it doesn't exceed the $27,700, you actually don't save anything on your income taxes by owning that home. So should you still buy a home for the tax savings of it? Well, I think the answer is yes. And I'm going to give you two scenarios why. So the first one is that you may very well in today's market at today's prices and interest rates exceed that $2,000 a month, right? So if you've got a $400,000 mortgage at 8%, you're paying $32,000 a year in interest, which is almost $3,000 a month. Plus you're probably paying another $400 to $600 a month in property taxes, right? So your total is probably somewhere around $36,000 to $38,000 a year of tax deductible mortgage interest and property taxes. So what does that give you above and beyond that $27,700? Well, it gives you about $10,000, which is, a pretty good savings. If you're at a 30% tax bracket, it probably saves you, about $3,000 a year. So good, that's a win. The second thing, though, is because you're now exceeding that threshold, certain things that previously would not have been tax deductible, things like donations to charity, things like certain medical expenses, now become tax deductible. So let's take that same scenario where you exceed that minimum standard deduction by $10,000, but now we add in $10,000 of charitable donations. Well, now you exceed it by $20,000. So now if you're at a 30% tax bracket, you're saving $6,000 a year, which is $500 a month. So when you're looking at evaluating, hey, do I want this new mortgage? You can factor in, I'm going to save $500 a month on my taxes, which makes it a little bit more affordable. So all in all, in today's market, having that mortgage is probably going to be a win on your taxes, but how much of a win really depends on your specific situation. And you should be talking to a professional to figure out exactly what that looks like for you. Thanks so much. Bye-bye.